All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. And before we get into any market-related discussions, here's a look at Derrick's positions as of our recording here today. Derrick, happy Monday. How's your day going so far?
Not bad. Not bad. Pretty good day from a day trading perspective. My swings are against me a little bit, but I'm so much lighter on my shorts after Friday. I reduced really significantly. So considering the amount that we're up, my swings are not a problem at all. So yeah, I mean things are good. It's been a really interesting 2 weeks here since you and I last got together. There's been some, interesting market action.
There definitely has been a lot more volatility than we'd been seeing in October, which I'm sure has been a nice start to November for you and your traders. Let's quickly talk about some of the news of the day, and then we can get into kind of the broader, the market action and the seasonality and all of that we're heading into. Market today up pretty big. The headline is that it's because of the news about the government shutdown and that the Senate is going to vote to reopen the government. It's interesting to me because I feel like the market didn't really react much to the government being shut down itself, but now the market is reacting really positively to the government reopening. What does that tell you about this market and what they, we talk like if they don't react to bad news, but we do react good to good news, it's a sign. So what does this tell you?
Sure. So, this phenomenon we've seen happen several times now over the course of the last year to date, where you get the potential bad news that comes in this case, it's with the government shutdown. The market doesn't really go down, but the VIX gets stronger. And then when you get through it, so now we're probably about to be reopening the government. When you get through it, even though the market never went down, the VIX went up. And when the VIX comes back down, it forces a bid underneath the market. And that's exactly what's happening here right now. And it's interesting. We've seen this phenomenon occur, I want to say, at least 3 times going back a full calendar year. The very notable one to me was pretty much exactly a year ago, actually going into the presidential election in October of 2024, the month before the election. So my entire trading career, I've been through a bunch of presidential elections. The pattern every time has basically been the same. The market sells off into the election because the market does not like uncertainty. And then when a president is picked, then the market shoots back up. And it has nothing to do with who wins, from my experience. The Democrat, the Republican, it doesn't have anything to do with who wins. It's just getting through the uncertainty of the event. And then a year ago in October was the first time that I saw this phenomenon play out, which from a technical perspective is kind of similar to what we're seeing here with the government shutdown. Obviously, the circumstance is different, where the market into the election actually didn't go down. If you go and you look at a chart of October 2024, it didn't really rip through the roof either, but, we had a small pullback right into the election. We didn't really go down in October 2024 in front of the election, excuse me. But the VIX went up. We had a very elevated VIX in October 2024. And then when the election was over and we saw that Trump became the president again, the market had a huge gap up and subsequently a really large 3-day squeeze. And that was entirely just because of forced buying that was coming back in as the VIX went down and as people who had put hedges on were being forced to roll those hedges off once the event was over. This is a similar situation. The market here has gone down actually in November, but I don't think it's been at all related to the government shutdown. I think it's been related to 4.5 other points that I'm happy to talk about. Maybe the government shutdown can be found a little bit within one of them, So maybe we started to see a little bit of an impact on that last week. But for the most part, the market never really went down on the government shutdown. But now that it looks like we're in the clear here, we've got the VIX all the way back down. So the VIX was, it closed at like 1950 on Friday, but it was as high as 2270. And, gapped all the way back down to a little bit above 18, and it's currently trading below 18 right now. So that, again, creates like an induced forced squeeze in the market. We'll see if this VIX actually continues to roll down deeper. This could work its way back down towards $15, $16, $17. So we'll see if that plays out, which could create a further bid underneath the market. So things are looking decently bullish in that regard now that we got more or less through this event.
All right. You and I haven't talked since the big Mag 7 earnings week and what that prompted in this market action-wise. And then, of course, the volatility of last week. So let's just kind of go over all of it. 2 weeks ago, you and I, did our thing here on Monday. And then it was Wednesday and Thursday were the big Mag 7 names or Mag 7 days that week. We've got Microsoft, Google, Meta on Wednesday, Apple, Amazon on Thursday. An interesting reaction, I think, one of the most interesting reactions to this report, rather, was to Meta's report for me, because it was kind of the first sign of the market not rewarding companies for spending really big on AI. The CapEx number really spooking the market, and they're like, hey, you're not spending enough, or you're spending too much and not making enough to kind of make these numbers make sense. It kind of reminded me of like Meta and the metaverse way back when they started getting punished for that, and they pivoted. So for you, what did let's talk about the Meta report and that reaction and kind of what that signaled for you about the company itself, but also maybe the broader AI trade and how the market is thinking about the AI trade now.
Sure. So let's go to the charts. So I've got a chart of the SPYs up. If you can get the screen share, there we go. So you and I believe we spoke on Monday, the 27th. And that was an interesting day because it was the first time that the market had hit my measurement of extreme upside extension since July 3rd. Where's July 3rd? Right here, July 3rd, since this day. And what makes that so incredible is not just that we went, whatever this is, basically 4 months without the market hitting extreme upside extension. It's that we were basically up every day for 4 months without hitting extreme upside extension. There's basically like a handful of red trading sessions over the course of an entire 4-month period, up every day. But it was this grindy move higher that never accelerated. And, my good friend Sami Abu-Saad loves to say, it's great wisdom, don't short a 45-degree angle uptrend or don't buy a 45-degree angle downtrend. You need to wait for basically one of two things to occur in those situations. You either need the market trend just to break down, which can happen if there's an event. We almost did that on October 10th, but we didn't quite get to the spot where we were able to fully trigger things and the market had a pretty fantastic recovery. Or the market actually breaks its trend to the upside, which is really what occurred here. And that's when we got extreme extension to the upside for the first time on October 27th, when you and I were talking, since July 3rd. So perversely, actually breaking a 45-degree angle upward channel to the upside is one of the best ways technically to get the market to go down, because you create this like forced squeeze in to the upside. Shorts are really getting squeezed. The speed in which the market's moving up also indicates that longs are chasing in. So once you get the shorts to squeeze themselves out, we get the longs to really get to chase in on that upside momentum. It actually makes it much easier for the down move to occur because the shorts got pushed out, so they're not buying in the same way on the downside, and all these longs are in, and those longs will quickly find themselves out of the money as this pullback occurs. So you don't have the shorts covering, which is buying, and you've got the longs that are selling, which is obviously selling into the down move after you get the actual break up. At the same time as that, come October 30th, which is the day, I believe, after Meta's report and Microsoft's report, we had on this day in the morning identified 3, which shortly thereafter turned into 4.5, what I'm calling major reasons why the market should go down. And I think that these are really important to understand conceptually. We also need to remember that reasons why the market should go down does not mean that the market will go down. They're just things that you really need to be paying attention to right now. And I'm happy to go over them, not in particular order of importance, but I'll save what I think is the most important for last. So first is that you had Jerome Powell come out on the Wednesday and be hawkish, right? That was actually the same day that Meta Microsoft reported after earnings. So Powell came out and he was more hawkish than the market expected. He was saying that the December cut is not necessarily a guarantee. We reduced the probability of a December cut from like 92% to like 70% off of his language. And it created, I think, even more question marks for 2026. And everyone was expecting, a lot of people were expecting the Fed to start to roll off their balance sheet starting November 1st. They said December 1st. It's only a month. It's not the end of the world, but it does indicate just a further thought process towards staying a little bit more hawkish than maybe the market was expecting. So that was one. Two was this is when Donald Trump and President Xi had their meeting. And the general consensus coming to that meeting was, sure, it's good that we're going to have 10% less tariffs on China. It's good that China's going to open up some of these rare earth elements. But that meeting wasn't enough. The meeting wasn't really a success. And I would almost kind of lump the government shutdown into that kind of general political sphere of things. So it's reason number 2 why, as the market's going parabolic, it may pull back. Reason number 3 is the dollar. So the dollar, I've been really paying attention to the dollar ever since it broke out above 27.60 on the UUP ETF. Just an ETF here where we can get a quick look at what the dollar is doing. One of the reasons why the stock market and commodities and so many things have done well in terms of their price is because the dollar has gotten absolutely destroyed this year. The dollar, I think, at lows at a certain point, it may not be this way anymore now that we've bounced, was set to have its worst year in 50 years. So overall, the dollar has been destroyed, but a weaker dollar means higher asset prices. So it helps to boost the stock market, helps to boost the earnings of a lot of the international companies that make up the S&P 500. But the dollar started breaking out in the beginning of October, and this has just continued to move higher and continued to move higher into the end of October as well. Had a secondary big breakout through $28. So that is reason number 3. Reason number 4.5, I'm skipping one here, is crypto. I'm only giving this a half and not a full reason why the market should go down. I think it's peripherally important, but maybe not as important. The question that we've been having about crypto's collapse, this move down here, it's been so much weaker than the equity market. The real question about this is, at a certain point within crypto selling, is it possible for there to be contagion into the equity market? Is it possible that if you are getting a margin call on your crypto account that you're having to sell stock because of it to meet it? So that was a question mark that we were starting to pay attention to as well into the down move. And then the most important reason out of all the reasons, though, was the AI trade. And it was coming off of Meta's earnings, which you had just mentioned. So the Meta earnings report was good. It was good, but they increased their CapEx again. And what's the difference between Google, who increased their CapEx and is trading great, and Meta, who increased their CapEx and is getting destroyed as a result of it? I would say that there's 2 things. One is that Meta is fundamentally more expensive than Google. I do think that matters. But 2 is we're starting to see, I think, a little bit of an inkling of kind of winners and losers in the AI space on who's doing a better job, where it's not just you can spend for the sake of spending anymore and the market's going to reward you for that. It's going to be, you can spend the money, but we need a game plan here. And Google seems like, even as they're increasing their CapEx, that they're doing it responsibly. The stock is cheap. They have a game plan, and that game plan with Gemini is working. There's a path here to revenue. Meta, when you listen to like the earnings call, when you listen to Zuckerberg speak, when you look at what the company's doing, it seems like Meta's just trying to like throw anything at the wall and see what sticks and hope that one of the areas in which they're spending a boatload of money in actually transforms into something. But I don't personally, anecdotally, see like anyone really going after and using Meta's AI. I see people using Grok. I see people using Perplexity. I see people using ChatGPT. I see people using Claude. I see people using Gemini. I don't really see anybody using anything that Meta's creating. And then they like tried to create, or they did create like a competitor to that Sora that OpenAI has, which is also not a good business. I don't think that OpenAI is running. I think it's a complete waste of money. But it just looks like they're just trying to do a little bit of anything, a little bit of everything, and nothing's actually connecting. And they're spending even more money to do it. And the market's getting fed up with this. And then the other one that you have to pay attention to in conjunction with Meta still is Oracle. And in a lot of ways, Oracle is the most important one because they really represent the most exorbitant spending compared to any of these companies, because they're the one that is like, we're going to go free cash flow negative. We're going to go free cash flow negative to try to get involved and catch up in cloud and in the AI because it's the future. At least when you look at even Meta, which is being punished now, Meta is an absolute cash machine. So shareholders can get upset when the metaverse doesn't play out, and they can bring down the multiple because they don't like the way that they're spending on the metaverse and that the results aren't coming in. They can sell down Meta now for the same reason on, hey, you know, we don't really like the game plan here that you're executing when it comes to AI. But at least Meta's got the money to be able to do it. Oracle going free cash flow negative to try to catch up is one hell of a bet that this stuff better play out. And at the same time, then you see the OpenAI guy, Sam Altman, coming out and saying we might need like a government backstop on our spending. Market did not like that. You know, OpenAI at this point has committed themselves to $1.5 trillion in spending commitments, that they don't have that money. So all of a sudden, I think starting with those Meta earnings back on here, the market for the first time took a hard look at what I've been saying for a while they will eventually look at. It's just been a matter of the timing. Is it worth it? Is this money that you're spending actually going to be successful? Is it going to translate into revenue? Is it going to translate into profit? And it circles back to what I've been saying for weeks. It's just the timing of it is the difficult part. It's not a question to me for a second on if AI is going to change the world. It's already changing my life in the way that I'm able to research and find information. It's a matter of, is it going to change the world in a way where the revenue justifies the spend? And when it comes to that question, my answer is no. But what the market's actually starting to say, and the market's smarter than me, is yeah, but there's going to be winners and losers. And at a certain point, I think we're finally at that point now, the market is going to punish the ones that are doing this well. I mean, punish the ones that are doing this poorly and reward the ones that are doing it well. And that's the difference between Google's earnings report and Meta's earnings report.
Great stuff. The winner, I think, of the Mag 7 earnings reports that week was Amazon, for sure. So, you know, you can see like the Amazon, a huge gap up, pulled back. So what do you think about Amazon now after that earnings? You know, 2 weeks here after earnings, or a week?
Sure. Amazon, a little bit of a different story, right? So Amazon not trading as cheap as Google, but it's a little bit on the cheaper side. And Amazon had not
and
been
definitely
trading
a laggard in the Mag 7 names.
Yes, it's been a huge laggard. The reason why it's been a huge laggard is because AWS growth. People were really believing AWS growth is slowing down, and that Microsoft and Google, they're the ones that are really growing at a rapid pace, and people are moving away from AWS. And then Amazon came out with a report that basically said AWS is doing great. It's growing. We're firing on all cylinders. The market loved it because that was the concern that had created the underperformance and the relative weakness going into the report. And very appropriately, the stock had a huge gap higher on it, like you just described, got really extended to the upside by that day two. Well, there was also an announcement on that second day. This was the earnings day. Then they had another AI-related announcement here on the 3rd, I think, with NVIDIA and OpenAI. And from that point of extension, it pulled back along with the market all the way into its equilibrium zone, created a beautiful pivot low on Friday. This is the low to be long versus. Unfortunately, the gap up was too big where if you weren't already in it, I don't think you could buy 248 versus that low. I don't think it represents a good risk reward. But if anybody had some from Friday, you've got your pivot, you've got your stop loss, you know what needs to hold, and the chart, in my opinion, looks pretty decent here. It might need a little bit more time of sideways action up here, but this pivot low now should hold unless the market really fails and breaks lower.
All right. Derek, we are in what is seasonally the strongest time in the market, November and December. September, October tend to be not so great, and they were great for the market. Higher, just keeps going. So November got off to kind of a rocky start. We've seen a lot of down red days in the first week of, last week in the first week of November. Do you feel like we that action kind of shook out the sellers, got kind of some of the froth out of this market to then now set us up for a really strong rally in November and December?
I actually don't think it was enough to really force the selling to unwind some of the positioning that I would have wanted to have seen to actually get significantly more long than I got on Friday. I actually wanted to see a little bit more of an unwind from the systematics. I think that there's a couple specific areas where there was a big washout, like in crypto, like in some of the non-profitable tech. But from a market as a whole, I actually don't think we washed out enough. We, once again on Friday, basically got right to the break of the CTA systematic trend following sell trigger and closed above it. So when you look at that's just one cohort, obviously, but when you look at that cohort of potential systematic selling or buying, it's still sitting at like the 99th percentile in terms of long exposure. And if anything, actually, the October 10th sell-off, which did cause selling from vol control, is actually leading to buying from vol control now. So that was actually washed out in October, and that's actually becoming a new buyer here in November. The question in my head is not, was that sell-off enough to wash people out? Because I think that the answer to that was no. The question is, did we need to wash people out in order to go higher? And I think that the answer to that is also no. I don't think that we needed to wash people out in order to go higher. I would have loved to have seen the market wash out a little bit more and wash out some of that positioning a little bit more. I really wanted to see an additional 2 days or so of selling beyond what we saw on Friday. If we saw that, I would have been 100% out of my shorts and really layering back into longs. Instead, into that degree of down move, I got out of a boatload of my short exposure. I'm now out of a lot of it from Friday, from Friday's low, actually. And I did enter some longs, but they were mostly shorter term longs for me. I'm still, I was in some Microsoft this morning and still in some Microsoft right now, but I was in NVIDIA, I was in Meta, I was in Oracle. I was buying all those names on Friday and got out of them relatively quickly because I wanted to see more of a wash, honestly. So for me, it was enough to really liquidate a lot of my shorts, but not enough for me to really layer into the longs yet. I don't think we washed anybody out. But again, I don't think it matters either. Vol control is back on the bid. The corporate buyback is massive here in November as a rule. Retail tends to be really strong in November. Maybe they're not as strong this November because they were such big buyers in September and October. I do have that in the back of my head. But generally speaking here, what I've been calling for and looking for was a dip to lead to a rally that goes into the end of the year. I wanted it to be bigger than what we got on Friday. But now if the SPY closes above 680, it looks like that was going to be it. So, I can't be upset. Was able to really liquidate a lot on my shorts. Just didn't quite get as heavy on the long side as I wanted to. Want a little bit deeper. But that's just the way it goes sometimes. And We get above SPY 680 here, which we're very close to testing right now as you and I are chatting. This market looks like it's starting to set up for that end of the year rally.
Earnings season is slowing down, but we still have NVIDIA to go. NVIDIA will be next week, so you and I will talk about that for sure next Monday. But what's been your take on this earnings season, Q3, and the results and how the market's reacting?
Sure. So the first thing I would say is everything I just said about the bullishness into the end of the year, I want to think about that in terms of those 4.5 points that I mentioned that you need to continue to pay attention to. It's not impossible for this market to thwart the end of the year rally based on those reasons. And, pay attention to the dollar. But I think that the most important one of those reasons to really pay attention to is the continuation of the AI trade. After we've had this NVIDIA get above 200, but lose 200 last week, with what Meta's doing, with what Oracle is doing, if there's anything that can keep this market from not rallying, I should say, into the end of the year, it's because there is a continued concern on the AI trade, and some of that could stem from NVIDIA's earnings report. I'm really watching today. I shorted some NVIDIA as a day trade when I first got into it. I'm really watching NVIDIA into this 197.50 to 200 level on the daily chart. I think that is equally as important, if not more important, than the SPY 680 level that I was just discussing. And a lot of this is going to hinge on what NVIDIA does after its earnings report. So first and foremost, you need to really, really, really watch NVIDIA, Oracle, and Meta. If we don't rally into the end of the year, they're the reason why. But to more directly answer your question, this has been an interesting earnings season because there's still been a lot of beats, but we are punishing stocks on it. If you are missing, you're absolutely and utterly punished. And if you're good, you're not good enough. It's another earnings season where it's like, sure, Amazon and Google were up, but look at Microsoft, like good, real good report, not good enough. Meta obviously was a pretty good report, not good enough because of the CapEx spend. Apple, they gapped it up and sold it. I know it's been holding in ever since then. But for the most part, I think a lot of these names have actually not been performing on their earnings reports. And we'll see what NVIDIA does. That's the next big one to pay attention to.
All right. So here on a Monday, after some selling last week, are there any setups that you are liking as a trader? Any charts that you're looking at that look interesting to you?
So right now the SPYs are kind of in that zone where I don't like to do a lot. So really between SPY 674 and 680 until I have more confirmation up or down. There's nothing new I want to be doing here. You needed to be buying on Friday. So we're doing this on Monday. You need to be buying on Friday. On Friday, we had extreme downside extension technically. The SPYs at lows were like $14 extended from the daily ADMA. The Qs at lows were about $20, $19 extended from the ADMA on the daily. We had extreme downside extension on Friday. That's the day that you needed to be putting in your buys and covering your shorts. And, chasing a gap is not something I really like to do, even though the market's holding in great and the market can continue for all the reasons that we discussed. I don't like to chase price. So at this point, it's like you just had an opportunity to buy SPYs all the way down near 660, basically, with huge downside extension. I can't justify buying 680, but I also kind of think that we're going higher. So what that means to me is I need the setup to come in. It's one thing if I think that the market's going to go up or down or whatever. I need the setups that actually present good risk reward opportunities to execute. And while the market looks like higher to me, which generally means that I want to be looking for longs right now, I particularly want to be looking for longs in names that have good, strong buybacks into this end of the year to take advantage of that strong buyback bid for November. That's why Microsoft was a go-to name for me to buy on Friday. But I need the setup to come in. We're $20 almost off of Friday's low in the SPYs. You just don't have a great risk reward setup to be and again, just note the language that I'm using. You don't have a great risk reward setup to be buying here. It doesn't mean that you can't buy here and make money. There's a good chance you could buy here and you could get a move to 684 if we get above 680, and you could make a few dollars for yourself. The question is, do you have a responsible setup that puts you in a good, consistent position for high risk, high reward, high probability opportunities? And I would argue that the answer right here is no. You got to wait for the setup to come in. So that's what I'm doing. What I do want to continue to try to press to the short side is non-profitable tech, which we did see, break at the end of September. So I, am sticking with and continuing to look at and reshort RGTI and QBTS and QS and JOBY. Those are all positions that I'm in right now that I'm short. Quad U is another one. All this non-profitable tech. QBTS had their quarterly earnings report, I think, last week. I think that this company's got a market cap of like $10 billion. Let me check that as I'm talking to you. And they reported revenue for the quarter of like $1.5 million. I mean, this is just absolute insanity. Yeah, the market cap is $10.5 billion for QBTS. So those are the names that I still want to be pressing to the short side if I press anything. So that's what I'm looking at.
All right, good stuff. All right, if you would like to get Derrick's free ebook, you can go to t3live.com/DO live. Again, it's a totally free ebook about prop trading, the benefits of prop trading, how you can work with Derrick himself there at T3 Trading Group and his team in the Pro Desk for virtual trading floor. Again, that's t3live.com/DO live. Derrick is a real trader, so I do want to let him get back to it. Have a great week, Derrick. There are some earnings reports coming. Just, we're still waiting for NVIDIA. So hope you get some more catalysts ahead and some good trades. Have a good week, and we'll talk next week.
Thanks, Red. I'll talk to you soon.
All right, bye.